Good morning, everybody. Happy Monday. It's October 13th, 2025. Happy Indigenous Peoples Day, or what used to be called Columbus Day. Great to be with all of you today. Just a quick reminder, the bond market is closed today, and it will be reopened tomorrow. So don't look for any of those fixed income instruments to be trading today. They'll be back. Those bond traders will be back tomorrow, first thing in the morning on the 14th. Nice rally we're having here after Friday's huge, massive down move. S&P 500 was down more than 2% on the day and finished on its lows, and actually even cruised even lower after the close, but is bouncing back now because apparently things are going to be fine with China, according to President Trump. So listen, you know what? We don't need to understand or rationalize the behavior of the markets, right? We just simply have to pay attention and adapt to the conditions and move accordingly, right? There's no money being made in trying to understand the rationale or the irrationale of market movements, right? We can't make money by just trying to explain things a certain way, because we know that markets can move opposite of what we expect for them to do, or what they should be doing, right? We've seen stocks go down on strong earnings and guidance. We've seen stocks go up on poor earnings and guidance, right? We've seen stocks go up on adverse market and economic news. We've seen stocks go down on very strong news. So if you're trying to get your arms around whatever the reason is, it's useless. It's pointless. Just pay attention to what the price action is going to do. For years, I tried to match up a rationale or explanation for what I'm doing, and it caused me to be late. It caused me to slip as I was making trades, and it just doesn't work, right? Pay attention to what's happening in front of you. Have some protection on. We have some protection on. I have some puts on. We had a lot of puts on Friday. I rolled them down to later this week, and we all know what's going to happen to those this morning. They're going to get smashed, right? But I'm okay with that because I have other long positions, and we also added some SPY calls at the end of the day in the last 15 minutes of trading on Friday too. So that's going to ease a little bit of the pain. But listen, at the end of the day, what I may not get the ginormous gains that I should be getting with the markets up over 1.5%, or almost 1.5% right now. But I'm not getting losses either. I'm going to have some gains, and I'm going to manage my positions as you guys should do as well. So let's take a look at a couple of charts here. We have a big week of earnings coming out. Don't forget. Tomorrow starts it really off in a big way with the banks and the financials. JP Morgan tomorrow morning before the market opens. Also, we'll hear from BlackRock, Citigroup, Wells Fargo, and Johnson & Johnson, big industrial name that is in the Dow Industrials. Domino's Pizza, Ericsson, Albertsons groceries chain, and then tomorrow afternoon, a couple of smaller names. But a big week for the rest of the week, right? We have ASM Lithography, ASML come out Wednesday morning. United Airlines, TSM, Taiwan Semi, Interactive Brokers will be out later this week. Also CSX, which is a rail. Ally, Schlumberger, SLB, American Express, which is a Dow Industrial component, will be out Friday morning before the open. So a lot of names coming out, a lot of smaller banks coming out. Morgan Stanley coming out Wednesday morning. I believe Goldman Sachs out as well Tuesday morning. So banks, financials, the headliners this week, but other names will be important as well too. So let's take a look at the chart. So the S&P 500, the SPY, which is the ETF for the S&P 500, didn't quite get to that 50-day moving average, right? If they included the after hours on Friday, we plunged right through it. But that's not going to show up on this chart over here. But we were holding up nicely at this 20-day moving average. And once we plunged right through it, it was opened up the floodgates on Friday to more and more selling. Now, remember something, okay? We can look for moving averages as targets where we think the markets can go to, where we think the markets can bounce or rebound off of a down move. But it doesn't always work out that way. It doesn't always work out where it's going to hit it exactly right. Now I'm going to show you an example of where it did, and I'm going to show you a couple of examples where it didn't. And this is the first one. S&P 500 SPY nearly missed that 50-day moving average. Now, certainly, if the markets turn back down, if we end up closing nicely higher and we fall back, say tomorrow or Wednesday, and break Friday's lows, which we close right on the low of 653 on the SPY, we're going to open up about 660 right now. So about 7, almost 8 handles higher than the close on Friday. If we do break those lows, then we're gonna come back and test this 50-day moving average and see if that can hold. And it more than likely going to break it and then start turning down in the next few weeks. Big volume day on Friday, huge volume day. Now here's an example of one where it did touch it. So again, if you were waiting for the SPY to touch that 50-day moving average, you didn't quite get there. But if you look at the DIA industrials, we landed right on the 50-day moving average, right? And that's going to be good enough to get a bounce, much like we did in early August, much like we did back in the early and middle part of June, which the 50-day moving average held in like a champ on several different occasions. Now we'll see if this holds on a couple of occasions. Maybe it won't. Maybe it'll just be this one day where it lands on a 50-day moving average, and then we're going to be moving up from there. Maybe that's the plan over there. You've got to just understand that the market will give you different signals at different times of the day, the week, the month. Okay, and you just have to pay attention and move with it, right? If you want to swim against the tide, good luck to you. I wish you lots of luck. It's not a very healthy thing to do, and it's especially for your portfolios to try and swim against the tide. Some people do it. If you're waiting around for big days like Friday to happen on the downside, you're only gonna get a handful of those through the whole entire year. You may only get 15 or 20 of those opportunities in 200 something trading days. So that's 10% or less chance of getting those downside moves, right? Don't have any preconceived notions of what the market should be doing, right? That's really important. Just go in and pay attention to what's happening with the action and trade accordingly. That's what we do in the chat room every single day. I've worked with a lot of the attendees and the contributors in the chat room, and they understand what to do and how to do it the right way. And that's why they're making a lot of money this year, and they've made a lot of money the last few years. So, as far as reports coming out this week, you can see the U.S. economic calendar. None today. Philadelphia President Anna Paulson is going to be talking a little bit later on this afternoon. We have a few more Fed speakers Tuesday and Wednesday. We were supposed to get the CPI number on Tuesday. That's not coming out. It's showing here that Thursday the PPI number could be coming out. Maybe they're anticipating the government reopening, but I don't think that's going to happen. I think some of these items are going to get scratched. Philly Fed manufacturing going to come out. We have quite a few speakers coming out on Thursday. 1, 2, 3, 4, 5, 6, 7 speeches. 3 of them by the same guy, Tom Bargan, and 2 of them by Mickey Bowman, and 2 by Steve Mirren. Friday, some more data coming out, mostly related to housing and manufacturing capacity utilization, industrial production. Again, some of these data may be delayed because of the government shutdown, and they're not going to be released. So maybe we're not going to be treated to some data. I think Chair Powell is speaking later on this week as well too. It's not on the docket over here, but I'm kind of curious as to why it's not. But I believe he's speaking later on this week. I could be wrong. So anyhow, that's going to be it, everyone. I'm looking at the banks this week as a potential play. Don't forget, some of these names have come down quite sharply over the past few weeks. Let's look at JP Morgan. Since the end of September, which was an all-time high 315, it's down to about 300 right now. Nice pullback if you want to jump in there and get in there for it's down about 3.5%. Nice pullback if you want to get in there right before earnings. Might be a good one to take a look at. Goldman Sachs also came down quite a bit too, from the highs 815 all the way down to 760, down also about 4%. From the recent highs, and again, almost landing on that 50-day moving average. It's going to be up a little bit this morning. One of my favorites, Citigroup, of course, down. It fell below that 50-day moving average on Friday. Had a big, huge outside day. Went all the way up to 98, closed at 93, 93. I'm taking a look at this one perhaps for a play out into December or January later on today. I know it's not looking very good. It's oversold. Think earnings are going to be coming out real strong. And remember something, when the stock rises a lot into earnings, it doesn't really help too much. It's better when it pulls back a little bit. And maybe this 10-12% pullback in Citigroup was just enough to push the stock forward after they report on Tuesday morning. So we'll see what happens. All right. Have a great day, everyone. I appreciate everyone spending a little bit of time with me. And you guys remember the Escape Club, the Wild Wild West? That was the song I put out in the start here, back in high school, college days for me. Pay attention to what's happening today. It's another very important day and important week. And again, remember something, the bond market is closed today. We also have a big expiration coming up on Friday afternoon. The options are going to be for October are going to be expiring. Could have some volatility coming in there, but actually the big volatility move from Friday is burning off today. So if this continues to move down, the VIX down 1.24, it's down over 7-8% this morning. The VIX futures are down sharply as well too. If gold is up almost $100 this morning, up to near 4,100, and we see silver pushing to near all-time highs. Remember, back in 2012, it went to 50. Back in 1980, it went to 50. We're right near 50 right now. So celebratory day for those who have been long silver for a long time. Finally back to those all-time highs, near it. I think if it blasts through there, I think we got some room up to about 57 or so, 58. So that's going to be it, everyone. Have a great day. Appreciate everyone spending a little bit of time with me again. And if you have any questions or anything, let me know. Oh, by the way, webinar coming up Wednesday after the close, how to create income from income streams using options. So it's going to be a good webinar to teach you how to use options to create a nice option income stream, selling options against your stock. So it's going to be a good session here. It's a new one for me, and I think I'm going to try and get Sam in there to help out as well, to talk about what he does. So have a great day. Trade well. See you guys all Thursday morning, and see you then. Bye. Turn to the left, turn to the right. I don't care as long as she comes tonight.